Last week has been a pretty road for the stocks market. When everyone thought that since stocks are going to grow forever, major tech stocks completely collapsed and experienced a drop day after day. Apple, Google, Tesla, every tech stocks is pretty much about pretty much down, and that's not by accident. The stocks market has been overvalued for the last few months since the stocks market has been rising like three in no tomorrow. And When the market is at its peaks, what do you do? Sell. And that's what has been happening recently. At the biggest of the August, Bezos first sold over $3.1 billion of the Amazon stocks. At the end of the August, Tim Cook sold $131 million of Apple stocks, since it probably won't cross the $2 trillion mark at least in the coming year or two. On September 1st, Tesla announced that it would raise $5 billion by the selling stocks from time to time, but it seems like that time wasn't long. By September 4th, within 3 days, they sold off everything and raised $5 billion. It seems like Musk also thinks that the price was at all times highs, and that's one reason why the market has been falling. The demand and supply usually set the price. Since the beginning of the pandemic, there has been a lot of the uncertainty about the future, but what we know for sure that we need to practice social distancing, and a lot of the jobs are going to be from home. Automation is going to accelerate. In other words, technologically is basically the future. So investors had to keep their wealth somewhere safe, and most important, somewhere where it would continue to grow despite the pandemic. And tech companies seems to like the best options beside gold. That's why the gold price and the tech companies grew exponentially, since there was much more cash chasing a limited amount of the stocks. Hence, price rose dramatically once every investors realized that the price are significantly overvalued. They decided to sell and reap off the profits, as would any rational investors. And one of the problem with the market is that most investors are not rational. In the past, you had to study finance, understand financial statements, and make reasonable financial decisions. Today, you can buy stocks and a few clicks on your smartphone. So if you are selling in the news at Apple, Tesla, or Amazon stocks are growing dramatically, why not take the ride with them and also get rich quickly? And when the market starts falling, people panic and start selling it to minimize losses, which drives price down. Why stocks are overvalued? Take Apple for example. Just in December of the last year, its price to earnings ratio was 17.7, which means for every dollar you invest, it will take the company 17.7 years to pay back the amount you paid for each shares. Since the industry average is 15, Apple was quite good investments back then. But then suddenly in the less than a year, its PI ratio jumps almost 40, when its earnings were pretty much the same as the last year. Of course, price to earnings ratio isn't the most accurate way to value companies, since it used the company earnings for the last 12 months. So let's take a look at the forward PE ratio. How much experts predict the company is going to earn? Last year it was a little 22 17, since its price to earning ratio has more than the double. Its forward PE ratio should have as well, right? Not at all. It jumped slightly to 28 as of the September 2020, which is another indicator that the stock's price is probably overvalued. That's why has fallen to 34 at the time of writing the script, and it would probably keep falling around 20. Of course, relying on some ratios to judge the market isn't the most accurate method, but it's not just the Apple, but also Tesla, Amazon, Google, and others. However, not the entire market is overvalued. Many companies haven't reached their pre-pandemic levels yet. It's only the tech companies that surged dramatically. So the question is, will the market crash again? The United States handles COVID-19 terribly. Cases might have been dropped to 30 or 40,000 a day, but that's still significantly high, and we can approach the winter. Expect we are warning that cases might spike again. On top of that, take into account that the elections is coming. You have to perfect recipe for another market crash. Elections create uncertainty, which means investors don't know what's going to happen. So regardless of what candidates do you support, we have to put the facts on the table. If Trump gets elected, we will have massive protests, which will also increase COVID-19 cases and will create more uncertainty. And if Biden gets elected, then corporate taxes or even the capital gain taxes would probably spike, which means fewer earnings for companies and investors, which means stock price would drop. But that doesn't mean that the market will crash as it did back in the March. Only time will tell. But what we know for sure is that the Fed is going to do everything possible to keep the economy stable, because that's the job of the Fed. If the economy is rising too fast, it raises interest rates, for example, to slow it down. Then the market is falling dramatically when the Fed steps into the market with the cash to make the crisis a little less painful, and that's what happened back in the March. The Fed lowered interest to almost zero, issued stimulus checks, started buying corporate debts. It basically used every weapon in the arsenal to prevent the economy sliding into recessions. The economy still went into the recessions, but the stocks market grew exponentially since the Fed made it clear that it's going to do everything to keep it stable. However, this can't continue. At some point, investors are going to realize that prices are inflated and the bubble would burst. The Fed is trying to keep the economy stable until the vaccine is available, so that everyone will get back to work, and the economy keeps growing as it's been prior to that. According to the Bill Gates, who has long ago predicted this pandemic and heavily invested in the top 6 companies working on the vaccine, a vaccine COVID-19 will most likely be ready by the beginning of 2021. So we are pretty close to it. To what expect to the market is going to crash in the next few months, no one really knows. But the main question is, should you sell or hold? If you are the long-term investors, you probably shouldn't care about what's happening in the market, because the market is always volatile. It's just sometimes it's a bit more than the other times. If you are the ETF investors, you probably know that, because these ETFs have just recently recovered to the pre-pandemic levels. As the election is going to create uncertainty, the market might dip a little bit, maybe more, but at the end of the day, it will bounce back to what it really was. For the last 10 years, the market has been growing tremendously, and the Fed did a pretty good job to keep it growing. It was the longest economic expansions in the history of the US. I personally won't be selling anything because I'm the long-term investor, especially the investors I have made this year, because I will have to pay high capital gain tax. So I would rather just keep my investments, but at the same time I probably won't be heavily on any stocks until after the elections. If stocks bounce back to what they really worth, then I'm all in. If not, waiting for the little more then probably be a wise option. And now it's your turn to tell me if you are investing or not. Do you agree with me that we are all in the bubble, and which stocks are you going to buy when the bubble bursts? Let me know in the comments below.